Today I am going to reveal one of the biggest myths in the world of investing. There are thousands of videos on YouTube and other platforms explaining how power of compounding can make you a crorepati, and it is really fascinating. I still remember when I started my investment journey, I saw the chart of Mr. Warren Buffett's wealth and how he has earned 99% of his wealth after the age of 50. Then there was this another rule of 15-15-15 where 15,000 a month invested for 15 years at 15% annual return can make you a crorepati. In fact, some people even go beyond 15 years and say that if you invest 15,000 a month for 30 years at 15% interest, then you will generate a wealth of 10 crore rupees. And the same 15,000 a month invested for 40 years at 15% CAGR will generate a wealth of nearly 50 crore rupees. And when I looked at these numbers, my first reaction was, I'm going to be the next Warren Buffett. However, as the reality started sinking in, the second immediate question was, where to invest to generate 15% annual return? Hey everyone, my name is Sahil and this is my Personal Finance Academy. Today's video is very interesting because in this video, I'm going to bust the myth of power of compounding. Power of compounding is something that attracts many new investors because let's be honest, everyone wants to be a crorepati. The only problem is power of compounding is actually a concept that helps you understand the importance of early investing, but it doesn't work in reality. At least not how it has been portrayed. Personally, I have received many questions about how power of compounding really works in real world. Because there is no investment tool that can generate a guaranteed 15% annual return on a consistent basis. The fact is, the best guaranteed return you can get in India currently is in the range of 6 to 7%. That's it. Now let me clarify that I am not against the concept of power of compounding. In fact, in my financial journey of nearly 10 years so far, power of compounding is one of the most important concepts I have learned. But I am only against the way this concept has been abused by people out there. So in this video, I will discuss the reality behind power of compounding and how exactly does it work in the real world. So first of all, like I said, the maximum guaranteed return that you can get in India today is in the range of 6 to 7% with options like FD, PPF, post office schemes, G-Sec bonds, etc. And within that, majority of investment options are taxable. It means if you fall into 20 to 30% tax bracket, then your effective returns post-tax are barely around 5%. And the 6 to 7% guaranteed interest is also not fixed. In fact, this interest rate is also on a continuous downfall in India. There was a time when FD rates in India were around 8 to 10% and today it is around 6 to 7%. And in the future, this rate is only going to fall. So even if you assume a post-tax return of 5%, then 15,000 invested for 15 years on a monthly basis at 5% rate will generate a wealth of 40 lakh, way below 1 crore mark. Oh, by the way, we have not even discussed the inflation part and real value of money because 15 years later, 40 lakh rupees would be worth just 19 lakh if you assume an annual inflation rate of 5% in India. So if you are thinking of becoming a crorepati by investing just 15,000 a month in fixed income instrument in India, then it would be a distant dream. Let me be very honest about it. But what about mutual funds and stocks? Doesn't power of compounding really work on mutual funds and stocks? Well, definitely not the way it has been portrayed. Because no mutual fund or stock can generate a consistent return on year-on-year basis. In fact, in case of equity mutual fund and individual stocks, you can even end up generating negative return for a specific time interval. For example, those who invested their money during 2021 bull run are still facing losses in their portfolio in 2022. And if you look at Sensex, in last 1 year, it has generated a return of 1.6%. It means in last 1 year, Sensex has not been able to beat FD returns. And new investors who don't have a lot of knowledge about investing are feeling cheated. Because when they started investing in November 2021 last year, that time Sensex was showing a return of 30% in last 1 year. And many individual stocks generated multi-bag returns post-COVID crash. And that's what attracted a lot of investors. They thought of doubling their wealth in no time. So the moral of the story is equity mutual funds and stocks do not generate a fixed return and hence power of compounding doesn't work in the way it has been portrayed. Then why does everyone talk about power of compounding with early investment in stocks and equity mutual funds? Because if you look at long-term picture, in last 30 years, Sensex has zoomed from levels of 2,500 in 1992 to current levels of 60,000. That's a return of 24 times in 30 years. In CAGR terms, it is 11.2% return. In last 20 years, Sensex has zoomed from levels of 3,000 in 2002 to currently at 60,000, generating 20 times return at CAGR rate of 16%. In the last 10 years, Sensex has zoomed from levels of 20,000, generating 3 times return at CAGR rate of 11.6%. So the point is, stock market doesn't generate consistent return and it can be very volatile in the short term. There have been cases in the past where Sensex has tanked 40-50%. However, in the long term, stock market always generate great returns. Now 15 years ago, if you had invested 15,000 a month in SIP mode in Indian stock market, then what could be your return? Well, I did the calculation and returns are around 70 lakh rupee. So not exactly 1 crore, but returns are much better than that of FD and other fixed instrument. And here, remember that 15 years ago in November 2007, Sensex was at its all-time high. However, a consistent investment in form of SIP managed to generate a good return. Now that's all about past. What if you start your SIP today, or if you have started SIP last year? Then what kind of returns can you expect from Indian market? Well, honestly speaking, 15% CAGR return is a little too optimistic. I'm not saying that it is impossible, but I feel that in the next 10, 15, 20 years, a better return expectation would be around 12-13% on a CAGR basis. But remember, it won't be a guaranteed return used in power of compounding calculation. In some years, you might even fetch negative return, while some good years could possibly generate 50-60% return. Net, you can expect 12-13% CAGR return in the long term. So rupees 15,000 invested for next 15 years at 13% CAGR can generate a wealth of 83 lakh rupee. Of course, your final returns would vary based on market condition at the time you are selling your investments. So I hope you understand this. Moreover, whenever you calculate your wealth 15, 20, 25 years down the line, always look at real returns. Because 1 crore in next 30 years will be worth only rupees 23 lakh if you assume an inflation rate of 5% on a yearly basis in India. Power of compounding never really talks about it. And of course, when you sell your investment, you have to pay tax. So you need to consider the final profit after tax. So next time, when someone talk about power of compounding, make sure that you understand all the points that we discussed. A, the returns are not fixed. Equity market can be highly volatile and you might end up generating lower than FD return in short term. However, in the long term, Indian stock markets would generate a very healthy double-digit return. And B, you also need to look at real value of money in 15-20 years after considering inflation. The intention of this video is to help you understand the real-world implication of power of compounding, as many people find it really difficult to understand how power of compounding really works. So ultimately, just like in power of compounding, you get interest over your interest that compounds over time. Similarly, in stock market, companies generate profit and that profit is again used for the growth of the company to generate even higher profits. And that compounds over time and ultimately the stock price compound, which collectively result in great returns from stock market and mutual funds. So the moral of the story is power of compounding is a great concept and it certainly helps you create wealth with early investment. Now if you expect, let's say, 12% return from investment in equity market, be it via your stock portfolio or mutual funds, and let's say you start investment of 25,000 a month at the age of 30, then by the time you reach the age of 50, you will create a wealth of 2.5 crore rupees. But if you start the same investment at the age of 25, which is 5 years early, then by the time you turn 50-year-old, your 25,000 a month at 12% rate would compound to become 4.7 crore rupees. Can you see the difference? If you just started 5 years early, your wealth would become nearly double by the time you turn 50. So power of compounding is really great, but you need to be realistic. Ultimately, your returns would depend upon market condition and there is no guarantee of generating exactly 12% return. You might fetch 11% or even 13%. So your final returns would vary and of course, You won't just invest rupees 25,000 for 20-25 years. It might happen that today you just started earning and hence you have only 5,000 a month to invest. And then 10 years down the line, you progress in your career and end up investing 50,000 a month. So your investment amount would also vary based on your financial situation. And you need to consider real value of money by adjusting inflation, and also need to take into account the taxation part, as there is 10% tax on profit from equity market in long term. Although there is no tax on profit up to 1 lakh rupee. I hope this video will give you a realistic picture of power of compounding. If you have any question regarding this concept, I would be happy to address. And if you find this video useful, do share it with your friends so that they can also get a clear picture about compounding. And if you are looking for more informative content on money management, don't forget to subscribe to this channel. I also have a complete course on money management where I have explained every concept in detail, including insurance, taxation, mutual fund, stock fundamental analysis, etc. You can explore it. I have provided the link in the description. Thank you so much.